Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then we're going to talk about second mortgages on primary homes. Give us just a minute here to get started. Let us go live on all the different platforms. We stream this live on Facebook, YouTube, LinkedIn, Spotify, Apple Music, and anywhere you can get a podcast. So we'll get started here in just a moment. Go ahead and drop a comment there in the chat as you tune in. We definitely appreciate the comments. I see some already coming in. Thank you. And we'll get started here in just a moment. Happy Friday to everyone. Hope everyone had a great week. I hope loan officers out there are ready to put in some work over the weekend and make some calls on the weekend. That's always the best time to call. And appreciate those comments coming in. We'll get started here in a moment. So we'll go ahead and take the chat off the screen because we're going to get started, but keep dropping comments in there and you can drop any questions you have as well as we go through the presentation here today. But we'll go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every morning at 11 a.m. Eastern on this show is go through some live mortgage rates to see what our actual pricing is looking like for the day. And then we do a deep dive into a different loan topic. Today's topic is going to be second mortgages on primary homes. So we talked about some second mortgages on investment properties previously, and we're going to be talking about primaries this time. So our sales manager, Jose, with 28 years of experience, will take us into that deep dive shortly. But before we do that, we'll pull up our rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, switch my screen and we will check it out. Lots of volatility today. We saw a big drop yesterday and we're seeing a big increase today. So it should be interesting to see what the rates are doing. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is February 2nd, just after 11 a.m. Eastern. So all of our general rates here are live. If you'd like a full breakdown of all the fees that go into the APR and itemized loan estimate, please get with our team members. We have over 250 licensed loan officers in 23 states. So to do our live pricing as we do every day, we'll set up a basic scenario to compare across the programs. We'll set a loan amount of $400,000. We'll set an LTV of 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And we'll compare that with FHA, which is usually the next best option for most customers. And then we'll go into our expanded guidelines where we have 5,000 additional loan options beyond the standard here. We also have VA, but that's only for our eligible vets and active service members. If you are, just let us know. We'll quote you up, no problem. And we also have USDA, but that's only for eligible properties. If you do happen to be looking in one of those rural areas, just let us know. Start with conforming conventional. We'll do a purchase, 30-year fixed, standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio of 40. So with these settings, let's see what's going on. Yeah, it's about the same as yesterday. So yesterday afternoon it went down a little bit. Now we're coming back up with the jobs report. Definitely put some pressure on the yields. So right now we're at 5.99% for 2.125 discount points. Equals a final APR of 6.24 here. So we love to see the fives. Yesterday's was the first show we got in the fives, and today we're still seeing some five action. So that's amazing. Now, if for any reason our customer doesn't qualify for conventional, usually the next option we want to compare, set up the same exact scenario, is an FHA option. FHA allows more leniency on credit issues and events, and also a higher debt-to-income ratio. However, we'll keep everything the same so we can compare apples to apples here across the programs and compare the APR. So let's check out the FHA options. And again, it's about the same as it was on yesterday's show. Again, it went down yesterday afternoon. Now it's coming back up a little bit with the jobs report pressure here. 5.25 rate, 2.375 discount points and costs. Puts the final APR at 6.17. So a touch cheaper here for FHA for our customers that qualify for both. So don't overlook that. And remember, this APR does include the upfront and yearly mortgage insurance that's required. So a good option for our customers that need it, and our customers that qualify for both, definitely check it out. Now, where we love to specialize is if our customer unfortunately doesn't qualify for FHA or conventional for any reason. Typically, most other banks or lenders will have to deny that customer, but that's where we love to present our 5,000 additional options under expanded guidelines here. So when we select expanded guidelines, also known as non-QM, everything will stay the same, but we have a new option pop up where we can change our income type. Full doc is what we use for conventional and FHA. That's 2 years of tax returns for most people. That's what most people are used to. So we'll typically choose a non-QM program to take advantage of an alternative. We got asset-related programs, business bank statement programs. The investor programs are just for investments. We'll show that in a minute. Personal bank statement, 12-month is our most common request. So that's what we use for the demo. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI, all kinds of different options. Our most popular is the 12-month bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit tax returns, may have various write-offs and may not qualify at all, or just may need a little bit of extra income to get that home they want. Either way, we will solve the problem. No tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So many times our self-employed borrowers qualify for sometimes even double the income using this method. So let's check out the non-QM options. All right, a couple of them are dropping here now, but again, we should see some more action here later. With best option today, 6.875 for 2.225 discount points and costs for a final APR of 7.261. So remember, this is about 1 point higher than conventional that we just saw there to use bank statements. So very comparable there for our customers that need to use it. Definitely some great options here. Please get with our team to find the best ones. There are hundreds of variations here of the bank statement options. Some of these may allow bankruptcies and foreclosures and other credit events, which may disqualify us from a standard program. And some of these may allow different ways to calculate the income. So hundreds of examples. Please get with our team to find the one that fits best for you. And Jose is going to go over some second mortgage examples later. We can't do that here on the live pricer. But before we pass it over, we always want to do some live rates for investors. So we love to work with investors, seasoned investors, first-time investors. We want to present all our options here. So we'll set up the same scenario, 80% loan to value. And we're going to compare the lowest rates we can offer for conforming conventional with our expanded guidelines, also known as non-QM. Remember, government programs, FHA, VA, USDA do not work for investment properties. So we'll start here with conforming conventional. Everything's going to stay the same as all our demos. We've only edited the occupancy. So let's check out those rates this morning. All right, best option here for conventional, 6.624 rate for 3.25 discount points and costs, puts the final APR 7.005. So right there, just over 7. And this is some of the first times we've been seeing the rates in the 6s for investors. So that's amazing. Now, I would recommend that all of our investors check out the non-QM programs, even if they qualify for one of these conventional programs, just to compare. So for our final demo, we'll do investment property, 80% loan to value again. And this time we'll select our expanded guidelines, also known as non-QM. So we have a couple options we have to change here first. First, the income type. So the most popular income option for investment properties is our DSCR loan. That's our most popular loan here by far. That's because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income to determine a DSCR value, stands for debt service coverage ratio. If the estimated rents on the appraisal can cover the expenses, the PITIA of the mortgage, aka the property will cash flow, that's a ratio of 1 or higher. We even have options for ratios under 1, but for the show, we always use 1.5 as the highest so we can see all the different programs pop up. And finally, a prepayment penalty must be selected. That is standard for a non-QM investment. 3 years is what we always use as the standard. We can choose 0. That will limit what shows up and cost our customer more. We could also choose 5 years, which does save our customers some money that are going to hold the properties, but does limit the programs that show up. Since 3 years is most common, that's what we want to use for the demo here. So let's check the DSCR options. Absolutely amazing. 6.75 rate for a DSCR loan is amazing. 3.275 discount points and costs. Final APR 7.242. So just a touch above conventional. I would say 99+% of investors, when they compare 7.24 APR for DSCR to a 0.005, I think is what it was just a second ago for conventional, will always choose the DSCR. No income, no employment. You can do 1, 2, 5, 10, 20 loans at a time, cash out multiple properties, purchase multiple properties. The opportunities are endless here in the DSCR. So very amazing options. And you'll see if we scroll down, some of these at higher rates and costs may allow things like bankruptcies, foreclosures. Some of these may allow different ways to calculate the income. Some of these may allow different property types. So tons of flexibility afforded once you go into the DSCR programs. So please be with our team to check those out. And now let me switch my screen again. And we'll get back to our primary home topics, which today we're going to be talking about second mortgages for primary home. So yesterday we talked about HELOCs and instant HELOCs, a lot of cool options. Now we'll talk about our true second mortgages. These are fixed rate second mortgages, which are very popular now for customers to keep their traditionally, in the last few years, we've had some record low rates. So a lot of people have very low rate first mortgages. In order to get cash out, they may not want to touch that low rate first mortgage and add a second mortgage or a HELOC. HELOC was yesterday. Today we'll be talking about a fixed rate second. Either way, the opportunity is to keep the low rate first and get a blended rate that is lower than what you could get if you refinance the whole property. So very popular request these days, especially as rates are higher than what they were in the past. So very popular request, very popular strategy. So hopefully that introduces it there for you, Jose. If you want to go into some more details on the examples, let's go ahead and check it out. You there, Jose? You got frozen again?
Same thing that happened yesterday. He got frozen.
He was moving for a second.
Hey, how you guys doing? Sorry about that. Yes, a little delayed reaction here. All right. So yesterday we covered the instant HELOC, like Nick was mentioning. So now we are going into the HELOan. Now, one thing I did want to state about our instant HELOC that we did yesterday was it's a unique product in that each draw has a fixed rate. Now, the rate is variable, so at any given time when you go do your next draw, there's a probability that that rate will be different. But the draw itself stays fixed. So if you are doing a blended rate calculation, the analysis, you can actually do it, but you have to do it for multiple tranches there. So, but the HELOan is fixed throughout the term of the loan. It is a closed-end loan. Difference between the HELOC and the HELOan. The HELOC being an open-ended loan, you pay interest on what you owe. So as the balance decreases, your interest expense will decrease as well. So let me share my examples I have for you today is for primary, right? And these are all cash out transactions. So our first example here is full doc, and it is the maximum 90% CLTV. So here we have our minimum rate, minimum cost is 11.375, lowest cost option, and you can buy that down to 10.125 for our HELOan fixed rate second mortgage. 90% CLTV on that one. Now we have primary cash out HELOan using bank statements. Little bit higher rate, as you can see, 11.75, but that's not too bad. Buy that down to 10.5 as our lowest rate option. But I did want to note that the main difference between the two options is the LTV. There is a 5% reduction in the LTV when going from full doc to bank statement. And obviously, bank statement is for self-employed borrowers. as is this P&L option, profit and loss report, also 85%. Now you will notice that P&L is a little bit higher risk, less options, and rate then is a little bit higher. So we're looking at 13.875 as our lowest cost option, and you can buy that down to 13.375 for our profit and loss 85% CLTV option. And then HELOAN option using 1099s. When using this 1099 option, very interesting to note that the expense factor considered is only 10%, which means that you will be able to use 90% of the 1099 amount. But now this option does require 2 years of 1099s. And you're looking at same rate as on the P&L, 13.875 lowest cost option and 13.375 lowest rate option. And even though this is our HELOAN episode, I wanted to show a HELOC just so that we can put things into perspective here. Right, this is primary HELOC, 760 plus credit, 90% CLTV. And as you can see, very good rate there. That's our fully indexed rate, 10.24%. But as I was mentioning, this is a variable rate. So if the rates go up, that will go up. And if the rates go down, that will go down. It's based on 8.5, which is the prime rate plus the margin. So margin is what, 1.75? Well, if you look at it there, it's 1.74, but I think it's actually 1.75. So now, again, this being a HELOC, you will pay the interest expense only on the balance. So if the borrower does follow an accelerated repayment plan, they will be bringing down that balance and they will be bringing down their interest expense. So even if you do have an increase in the rates, that should be offset by the decrease in the balance. So very good options here. But again, if you want better planning, you're going to go with the HELOAN. And also, obviously, this is primary. But if you're going to go investment, definitely all of these same options of bank statement, P&L, 1099, as well as DSCR are available for the HELOANs, which are the only one of those options that is available for the bank statement. For the HELOC is the bank statement option.
Okay. I don't see any questions here. That was a quick one. All right. Well, let's go ahead and wrap it up then. It's Friday. I know everybody's got some calls to get to and some deals to do. So remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back next week with some new topics. Thank you, everybody, for tuning in. We'll see you Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great weekend, everyone.